How disappointed do you think some in the markets will be with this figure?
Well, I don't think anybody should be disappointed if a number comes in 0.1 above or below consensus expectations. Consensus is a bit of a stab in the dark these days anyway, and with numbers like this, it's a rounding error. So it's more or less as expected. Some of the other details, the CPIH number, which is the new number we're all supposed to focus on, came in line with the expectations. It's broadly what was expected. We know energy prices have been going up. It's going to have this sort of an impact.
Yeah, but it doesn't do anything for those who were hoping for a moderation at this point in the inflationary pressures. Where do you think that leaves us then as we speculate on how many more rate hikes we get from the Bank of England?
Well, there, of course, we've got the complication of politics, because the events of the last couple of weeks have put a competence risk premium into financial markets, because financial markets have not judged the UK government to be as competent as perhaps it could have been. And so as a result, the Bank of England has got to consider what it needs to do to stabilise markets, what it needs to do to stabilise sterling, because, of course, there's a feedback loop. Sterling goes down, price of imported energy goes up, cost of the government's price cap goes up, more fiscal deficits. I mean, it's got to try and control all of this. I think the bank is going to be less aggressive than it was going to be a week ago, as the government has continued to turn its policies around. But it is going to have to still be more aggressive. But that's somewhat independent of where we are right now with the spot consumer price inflation number.
Paul, it's been a turbulent couple of weeks here in the UK, and we're waiting out now for the Halloween budget, as it's been nicknamed after the mini budget. What do you make of the level of stability we've got now when it comes to the fiscal position in the UK, and just how the markets are in terms of sensitivity to further news flow?
Well, I think what I think was interesting about the whole debacle of the last 2 weeks is that, to some extent, yes, it was the deficit, but actually I think it was more market concern at the ideology that was behind the deficit. Because, of course, Germany is borrowing money for a price cap in its economy, and that's not had anything like this in terms of market reaction. The deficit itself was a problem because it was deficit financed tax cuts, and it was this nonsensical idea of trickle-down economics, which frankly was debunked 30 years ago, that seemed to be behind it all. And I think that's where the market concern was. So I think we've had a return to some credibility with Chancellor Hunt setting out exactly what he intends to do in terms of not just tightening fiscal policy, but actually committing to fiscal policy stability over the medium term. So I think the important thing here has been the change in ideology, the trashing of the ideology. The damage, however, has been done. We have got higher mortgage rates. We've got this competence risk premium coming into the market. And as a result of that, we are now on a lower growth trajectory. Turns out the leader of the anti-growth coalition was hiding under a desk in Downing Street all along.